All right, let's get right into it. Today, we're talking about something I like to call the casino illusion. It's this really pervasive and dangerous idea that high-leverage trading is some kind of sophisticated investing. We're going to peel back all the layers, the fancy charts, the confusing jargon, and just look at the cold, hard math of why this turns the market into a game that, for most people, is basically impossible to win.
So let's just get this out of the way right up front. If you're slinging around 100x leverage, chasing these lightning-fast wins, and your whole strategy is basically built on hope instead of actual probability, you're not investing, you're gambling. And the only difference is the setup has much better lighting and way nicer charts than a casino floor.
But you have to ask, why does this illusion work so well? I mean, why do so many smart people fall for it? It's because the entire experience from top to bottom is designed to feel incredibly professional. It's made to feel like a serious, high-stakes financial activity. So let's break down that appearance.
And just look at the difference here. On the left, you've got everything that gives it the look of being professional, right? The complicated charts, dozens of indicators, a whole new language of technical terms. It feels really sophisticated. But the reality, what's really going on underneath, is on the right. It all runs on the exact same principles as a casino. Pure math, hard probabilities, and a built-in house edge.
And this, right here, this is the absolute core of the problem. A professional look doesn't mean you're going to get professional outcomes. Not at all. The real difference is the math. And, math is completely indifferent to how confident you feel or how cool your trading setup looks.
Okay, so let's pull back the curtain a bit more, because now we're getting into the engine room of this casino. We're going to look at the brutal, unforgiving mechanics of how leverage actually works. And we're going to expose that hidden house edge that's always, quietly, working against you. 100x. This number gets tossed around in trading circles like it's nothing. But have we ever really stopped to think about what it actually means, mathematically? Let's unpack that.
So, when you're using this much leverage, you're amplifying your position to a massive degree. And what that means is that even a tiny, completely normal little wobble in the market,
just 1%. I mean, think about that. 1%. A move that can happen in minutes, sometimes seconds in a volatile market. A move that a real investor wouldn't even blink at. And just like that, it's over. A single 1% move against you wipes out 100% of your money. It's not just a loss. It's a total wipeout. That's the brutal, unforgiving reality of high leverage. Now, the technical term for this disaster is liquidation. It's when the platform's algorithm just automatically closes your position because your losses are bigger than your initial margin. Your entire stake is just gone. See, you're not just betting on being right about the direction, you're betting on near-perfect timing. And that's not a strategy, that's just pure luck. And just like any good casino, the platform doesn't need you to lose every time. It just needs a small, persistent edge. In trading, that edge comes from all these little cuts. Trading fees on every single move, funding rates that slowly bleed your account, slippage when you buy or sell, and of course, the fees they collect from forced liquidations. These costs add up, silently draining your capital. The math is always, quietly, favoring the house, not you.
This brings us to a really tough truth about playing this game. Even if you're good at it, even if you're right most of the time, you can still lose everything. Let's look at why the math of this system makes winning in the long run so incredibly difficult.
So here's the crucial thing to understand. Leverage creates this wildly unbalanced risk. It magnifies your mistakes far, far more than it rewards your successes. You can string together 10, 20, maybe even 30 small wins and feel like an absolute genius. But it only takes one bad trade, one unpredictable market spike, to erase all of that progress and your entire account. That's not investing, that's playing roulette with charts.
And what's worse, the whole system is designed to be psychologically addictive. It creates this intense emotional roller coaster. First, you get a fast win, and that triggers a huge dopamine spike in your brain. It feels amazing. Then, inevitably, you get a fast loss, which is just devastating. This leads to what's called the emotional chase. You're desperate to win it all back, usually by taking even bigger risks. And that just starts the whole cycle over again, keeping you clicking, keeping you emotional, and keeping you in the game.
This is a fundamental rule of any casino anywhere in the world. They don't survive because one skilled player wins big once. They survive because millions of people play over and over and over again. The more you trade with high leverage, the more times you expose yourself to the house edge and to the mathematical certainty of that one catastrophic mistake. Frequency is your worst enemy.
So, now that we've dismantled the illusion, the mechanics, and the psychological traps, let's draw one final sharp line in the sand.
What is the real, fundamental difference between genuine investing and the casino we've been describing?
This table really lays it all out, plain and simple. Investing is often slow. Let's be honest. It can be pretty boring. It's driven by probability and math, and its number one goal is long-term survival. Most importantly, it deeply respects the risk of losing. Gambling, on the other hand, is fast and exciting. It's driven by hope and raw emotion. The goal is always that short-term win, and it dangerously ignores, or at least massively underestimates, the downside. So this is the question you have to ask yourself, honestly. If your strategy relies on constant adrenaline, if it needs perfect timing, and if it feels more like a high-stakes video game, it's probably not built for survival. It's financial entertainment, but with very real and often very severe consequences.
And that really brings us to the ultimate takeaway here. In any market, in any situation where risk is involved, survival has to come before excitement. Always. Building wealth is a marathon, not a sprint. The real goal is to stay in the game, not to get a momentary thrill.
You know, at the end of the day, the markets themselves aren't the casino. It's high leverage that's the tool that turns them into one for you. If you want long-term results, the only way forward is to cut through all the noise and find the clarity that comes from the math. Because when you ignore the probabilities, the house always, eventually, wins.